E9-5. Okay, we have now the patient revenue, 51,500. Then we have the dentist salaries equal to 23,800. Hygienist wages, 5,600. Friends benefits, 2,200. Lease expense, 2,000. Administrative support, 1,900. Depreciation equipment, 1,500. And utilities for 550. And we have now the operating income of 13,950. Next, we go to, now by the way, we are still dealing with these income statements but focusing on service firms. Computing activity-based costing rates. The partners, now we have E96. The partners of Mason and Houghton, attorneys at law, decide to implement an activity-based costing system for their firm. They identify the following three cost pools and budgeted amounts for each of the coming year. Friends benefits, we have paralegal wages plus overhead. So we have paralegal support and research support. So we have three cost pools: friends benefits, paralegal support, and research support. It's determined that the best cost driver for friends benefits is professional labor hour, paralegal support is partner labor hours, and research is professional labor hours. Compute the budgeted overhead rates for each of the three cost pools. Now we have the terms cost pools, and here we have the group of expenses to be recognized. For number one, we have friends benefits. Second, paralegal support, and the third is a research support. And we have now your uh, cost drivers. Now they are your cost drivers or cost bases. So bases. We do not call this bases, but for activity-based costing, we call this cost drivers. So the budgeted overhead for E9.6, we have the three cost pools for the cost pools including friends benefits, and here friends benefits, paralegal support, and research support. Then we have the budgeted cost for friends benefits, 450,000. For paralegal support, 250,000, and research support, 650,000. And the best cost driver for friends benefits is dollars. So we have now budgeted cost drivers, $1,460,000. So we now divide 450,000 cost by the budgeted cost driver, which is still in cost, no, dollars divided by dollars. So we have 30.82%. It means that 30.82% of the budgeted cost drivers is the budgeted friends benefits. Then for the paralegal support is the cost driver is 4,000 labor hours. So we have to divide $250,000 by 4,000 hours. It gives 62.50. That's your labor hour, the rate per labor hour. Then for research support, again, is based on 20,000 professional labor hours. So the rate is in hour, professional labor hour. It's only friends benefits where the rate is in percentage because you are dividing cost over cost. Next, we go to E9 7. job cost for a client. That's the continuation of 9.6. A client, Jim Adams, requires 10 partner labor hours and 25 professional associate hours from Mason and Houghton, the law firm. In E96, partners are paid $125 per hour and associates make $60 per hour. Compute the cost of the Adams job. So in E97, the partner's time is 10 hours multiplied by the rate of the partner is $125. So the associate's time is, we have now 25 hours for the associate multiplied by 60. For the friends benefits, that's 0.3082, the 30.82% in number 6. So we multiply the rate by uh, the result of adding 1,250 and 1,500. So in other words, the friends benefits is computed based on the partners and associates salaries. Now the paralegal support is 62.50 per hour. So the paralegal, since a client requires 10 partner labor hours, so you multiply 62.50 by 10 hours. That's based on the labor hours. As stated, the paralegal support is 62.50 per partner labor hour. Okay, then the research support is equal to 32.50 based on professional labor hours. So we now have the rate of 32.50 in 9-6. Then we multiply this by the sum of 10 hours and 25 hours. They are considered as professional labor hours. So we have the total job cost equal to 5,360.05. Okay, now we go to E9-8, comparisons of simplified costing system with activity-based system. Continuation of E96 and E97. Prior to instituting an activity-based costing system, Mason and Houghton, the attorneys in E96 and E97, utilized a simplified costing system with one direct cost category, professional labor, and one indirect cost category, professional support. The average wage rate for professional labor was 73 per hour, and the overhead rate for professional support was 67.50 per professional. Wala gid post nga dugay no. So pila na nakuha ko? Pito, kuha lang. Nagsugod ko. Okay. So compute the job cost for Jim Adams, client in E97 using the simplified costing system and determine the difference between it and the job cost using activity-based costing in E97 and discuss the reasons for the difference. Now in E98, if we use the simplified costing system, we have now $73 per hour and you multiply it by 35 hours because the average wage rate for professional labor was 73 per hour and the overhead rate for professional uh, support was 67.50. Both are based on professional labor. So the total job cost of 4,917.50. Then the job cost under activity-based costing is 5,360.05. Under simplified, it's 4,917.50. There's a difference of 442.55. It's higher under job ABC costing. Now we have in E9-7, we have the cost of under ABC, the cost of 5,360.05. Okay, so we have to explain the difference as stated. We have to discuss the reasons for the difference. Jim Adams used a higher percentage of partner hours relative to associate hours, 40% rate. That's 10 over 25 than the 20% rate used by dividing 4,000 hours by 20,000 hours built into the average billing rate and overhead rate. The ABC system recognizes this difference and the resulting job costs are 442.55 more when using activity-based costing. Okay, we now go to E9-9, computing activity-based costing rates. The partners of Rosso and Cardis CPAs decide to implement an activity-based costing system for their firm. They identify the following three cost pools and budgeted amounts for each for the coming year. So the cost pools are friends benefits, administrative support, and audit support. It's determined that the best cost driver for friends benefits is professional labor dollars. So in dollars, administrative support is partner labor hours in hours, and audit support is professional labor hours. So again, we have to emphasize what are the important terms. We are now using cost pool and cost driver. So cost pool, we have now a group of expenses and costs that will be combined in only one title. So that's your cost pool, like say friends benefits and administrative support and audit support. Again, the cost driver is the base. So we have to compute for the overhead rates in for each of the three cost pools. So we have now the cost pools, then we have the budgeted cost given, and we have the budgeted cost drivers given. So we now divide for friends benefits. We divide the budgeted cost since the cost driver is 1 million professional dollars. So it means that 30% of professional labor dollars is the budgeted friends benefits. Now for administrative support, it's $50 per partner labor hour. We are now dividing the total cost of administrative support by the number of partner labor hours. So we have 50 per partner labor hour. And for audit support, we are now dividing 450,000 the budgeted cost by the budgeted cost drivers of 15,000 professional labor hours. So the budgeted rate is $30 per professional labor hour. Now we go to E9-10, categorizing balance scorecard performance measures. We have now the from the following list of performance measures, label each one as financial, customer, internal process, or learning and growth. Now, these are the four performance measures categories under the balance scorecard. So we have now percentage of on-time deliveries, employee turnover ratio, revenue from new contracts or new products, number of new customers, percentage of compensation based on team performance, percentage of products returned, operating income, and time taken to replace defective products. So We have this, label each one as either of the four. So the percentage of on-time deliveries, this is under the internal business process. Employee turnover ratio is under learning and growth. Revenue from new products is financial. The number of new customers under customer. Percentage of compensation based on team performance is learning and growth. Percentage of products returned, actually returned by customers, so still under customer. Operating income is financial, and time taken to replace defective products is under internal business process. Now remember these four categories. Okay, we have E9 uh, 11, evaluating the appropriateness of performance measures. Lux Incorporated, a chain of gasoline service stations, has a strategy of charging premium prices for its gasoline by providing excellent service such as attendance to pump gas, clean restrooms, and free air for tar inflation. Its balanced scorecard performance measures include increase in operating income through cost reduction, that's financial, market share in the overall gasoline market, customer, wait time at the pump, internal business process, and employee bonus based on number of customers served, learning and growth. Indicate whether each of these performance measures is appropriate given Luke's strategy. So, increase in operating income through cost reduction. This should not be a primary performance measure for a company whose strategy is to charge premium prices for excellent service. Increase in revenue through premium pricing and gross profit margin percentage would be more logical financial performance measures. So it's more of just shifting to the terms in not increase in operating income but increase in revenue through premium pricing and gross profit margin percentage. Then second, market share in the overall gasoline market is not an appropriate performance measure in the customer perspective for Lux. More appropriate measures would be market share in the high-end service gasoline market, number of customer, loyalty points awarded, and number of repeat customers. Now, these last phrases are the more appropriate measures. Wait time at the pump. This would be an appropriate performance measure under the internal business process and perspective for a premium service station, emphasizing superior service. Employee bonus based on number of customers served. This would be an acceptable performance measure as long as it was extended to number of customers served well. The bonus should not be an impetus to service as many customers as possible without regard to quality, since stated that employee bonus based on number of customers served under learning and growth. Now we go to E9-12, evaluating the appropriateness of performance measures. Basic Incorporated, a chain of gasoline service stations, has a strategy of charging discount prices for its gasoline by providing very little service and charging relatively high prices for the goods in its attached mini market. Its balanced scorecard performance measures include increase in operating income through cost reduction, That's under financial. Market share in the overall market, gasoline market, is customer, wait time at the pump, internal business process, and store manager, and employee bonus based on number of customers served, learning and growth. Indicate whether each of these measures is appropriate given basics strategy. So we now have your E9-12, increase in operating income through cost reduction. This should be a primary performance measure for a company whose strategy is to charge discount prices. Keeping a close eye on operating costs is the best way to stay profitable with this strategy. Note that this comment applies to the gasoline portion of the business. Second, market share in the overall gasoline market. This under customer. This is an appropriate performance measure in the customer perspective for a company that attempts to attain a higher market share through discount pricing. However, if available, it would be even more meaningful to determine basics market share in the discount pricing gasoline market. Wait time at the pump. This would not be an appropriate performance measure under the internal business process perspective for discount pricing service station. Customers are pumping their own gas rather than having attendants pump it for them. Measuring wait time for the grocery part of the business might be appropriate. Then employee bonus based on number of customers served. This will not be an acceptable performance measure for the service station part of the business, but might be used for the grocery part of the business. This would also help to evaluate how good a job the store manager does in attracting service station customers to the mini market. Okay, we now go to E9-13, identifying quality cost. Categorize each of the following quality cost as prevention, appraisal, internal failure, or external failure. So we have now rework is we have internal failure. Then product testing is appraisal. Then customer support is external failure. Inspection is appraisal. Warranty repair is external failure. Statistical process control is prevention. Quality circles is still prevention, and scrap and spoilage is internal failure. So we have now your identifying quality cost. Okay, now let's take up one more problem in connection with review mo na. Subong may bilin pa ang Zoom. May time pa. May 20 minutes pa po. Imagine, 20, 40, 35 minutes. Okay, we now go to P9-12, P9-11, problem P9, P9-11, designing a balanced scorecard. So for P9-11, focusing on Delhi Dairies, a vertically integrated company that has dairy farms, processing plants, and retail ice cream stores. Delhi's strategy is to maximize shareholders' value by providing top-of-the-line ice cream products that are high in butter, fat, and for which consumers will pay premium prices required. Prepare a balanced scorecard for the leaderies without numbers, which will help them to achieve their strategy and to maximize long term share value. Give at least two performance measures for each category. Note that many answers are possible for this solution. So, financial, in the balance scorecard, we have financial. So what may be included? Increase in operating income through charging premium prices. Then increase in revenue through new product introductions and gross margin percentage. Then we have for customer. For customer, market share in the premium ice cream market, customer taste testing surveys, loyalty program point awarded. For internal business process, number of production process improve to ensure premium quality, reduction in customer wait time at the retail stores, and percentage of batches meeting quality instructions. Okay, so P we are still in P9 11 before we go to P9 12. So P9 11, we have this learning and growth. That's the last part of P911. That's the fourth. Learning and growth. Percentage of employees trained in new production process and percentage of retail employees trained in customer service. Okay? We now go to P9-12, preparing a cost quality report. Pimental Manufacturing Incorporated is the producer of specialty machinery for numerous customers. It had $10 million of sales in 2016 and identified the following costs as being related to quality. So we have now the cost, scrap and spoilage, inspection, warranty repairs, supplier evaluation, product testing, customer support, rework, quality training, preventive maintenance, machine repairs, warranty replacements. Prepare a cost quality report for the company for the year ended. So we now have the cost category. Okay, so we have now the following cost, scrap and spoilage. So we have to determine where should this be included, scrap and spoilage. So under internal failure cost, then inspection will be under appraisal. Warranty repair should be under external failure. Supplier evaluation is under what category is prevention cost. Then product testing is under appraisal cost. Customer support under external failure. Rework is under the category of internal failure. Quality training is under prevention. Preventive maintenance under prevention. Machine repairs under external here internal failure, and warranty replacement under external failure. So all in all, prevention cost includes quality training, preventive maintenance, supplier evaluation, and the total. Appraisal cost includes product testing, inspection, And the total internal failure cost includes scrap and spoilage, rework, machine repairs. And external failure cost includes warranty repairs, warranty replacement, customer support, external failure. And we have the total quality cost, total adding 178,143. So we have now the amounts and the total sales as given of 10 million. So we now compute as a percentage of quality cost. Your prevention cost is 26.49% dividing 178,000 by 672,000. Appraisal cost 21.28%. Then internal failure cost 24.7% and external failure cost 27.53%. Now sa percentage of sales, we have sales of 10 million. So we have now 178,000 divided by 10 million. It gives 1.78%. Appraisal is 1.43%. We have internal failure cost of 1.66% and we have external failure cost of 1.85%. That each of these is taken by dividing each cost by 1 million. So we now have this. Now we go to the last problem, 9-13, analyzing cost quality based on the cost quality report prepared in 9-12 above. Offers suggestions to Pimental Manufacturing Incorporated as to how it might improve its quality program. So Pimentel should invest more in its prevention and appraisal programs in which then should significantly reduce its expenditures for internal failure and external failure costs. Currently, its internal failure cost as a percentage of quality cost and external failure costs are as much as or more than uh, its prevention cost and appraisal cost. So, as a percentage of quality cost is 24.7% and external failure cost of 27.5%. Alright, so these are the answers that we have to the problems and to the exercises. Now, for Thursday, we are going to take up the remaining problems sa Webes. So, that will be on April 22, P9-1, P9-2, P9-3, P9-4. Okay, so on April 22, and we have P9-6 and P9-7. Now we are going to take up these problems, and after we are going to move to chapter 9 of the book of Hansen and Moen. Okay, is there any question before we end our class? Any questions? Okay.